Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Marex, Product Development Specialist with Nasdaq Index Research, to discuss the Nasdaq Junior Biotech Index performance and how it compares to its big brother, the Nasdaq Biotech Index. Mark, it's great to see you as always. Let's take a look at your first chart here, and it looks like the Junior Biotech Index has enjoyed some nice relative performance.
Yeah, great to be back, Jill, and really love highlighting this index, which NASDAQ launched in April of last year. We had Defiance ETFs launch the tracking product, the ETF, on August 4th. And, really wanted to highlight for folks how this index has performed since that product launched. There's really two different stories here, right? If you look at the green line, that's the Nasdaq Biotech Index. That's the big boy that's been around for almost 30 years, tracking pretty closely, right, with NDX, the Nasdaq 100, with SPX, the S&P 500. Having solid performance since that time, nothing to frown at. But the junior version of biotech is up a stunning 52%. Had to double check these numbers, before I wrapped up this slide. And you can see that part of that is a small cap story, right? We've seen small caps really pick up the pace since early November, since that vaccine approval started to come in. So part of this is a small cap story, kind of adding, tailwinds to just a generally supportive environment for smaller and mid cap biotechs. There's been a ton of M&A in the sector. That's kind of supporting valuations, and we're really kind of excited with how this product has performed since it's launched.
What does its concentration look like relative to the larger biotech index?
Yeah, so this is kind of an interesting way to look at it, right? On the left, you've got the junior constituents sorted from biggest index weight all the way down to smallest. It's about 240 constituents. And then on the right side is the regular Nasdaq Biotech Index. Same thing, sorted largest to smallest with about 280 constituents. So the key thing to note here is concentration, right? You've got the biggest constituent in the junior index at about 2.4, 2.5% index weight versus 8% for the biggest in the regular biotech index. That's got the, kind of modified market cap weighting scheme where you cap the biggest at 8%. But, given that the junior focuses on sub 5 billion market cap names only, you've got a lot more exposure to those mid cap and smaller cap names. I looked at it just before this. It's something like 55% of NBI is just excluded from the junior index, right? So it's a huge chunk of NBI that you're really not getting a lot of exposure to if you're tracking just that index. That's why I think, adding sort of an overlay of the junior to the regular biotech index gets you that more meaningful small and mid cap exposure and a lot less concentration as well. You're not focusing so much on your bets in that large cap space.
And Mark, finally, does the junior biotech index experience a lot of turnover?
So, it kind of depends on the year. What we had in December with the annual reconstitutions was actually quite a bit of turnover. We saw 99 additions to the index in December and 27 deletions. So what I've shown here is kind of give people a sense of what types of names are coming into the index. You could see about a third of those ads on the left side were names that started trading in 2020. So these are very young names. About half of them started trading in the last 3 years. The other half kind of older than that. And then in terms of, the names that were taken away, you see kind of the opposite, right? You see most names that are going away are, have been around for at least 10 years or more. And part of that is a function, again, the M&A trends in the sector have been really, really strong. Check this just before getting on. Per FactSet, M&A in 4Q was up 372% year over year for the biotech industry as a whole globally. So what you're seeing is some of those names are getting taken out by those large and mega cap biotech names that you don't have in this index. And the rest are, frankly, just doing so well in terms of performance that they're graduating out of the junior the junior leagues and into the big leagues. So it's a healthy amount of churn this year. Again, big function of just rising valuations as well as rising M&A.
All right, Mark, great stuff as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.